Hello Mavericks, this is Imri and welcome to today's currency recap. It is Thursday, April 25th. So today, as always, we'll be doing a review of the trading day. We'll be going over any meaningful news, and indeed, there is some meaningful news to cover from today's trading session. We're then going to look at the broader equity markets, take a look at a couple key commodities, and then we're going to dive into some technical analysis on the major indices, followed by a currency basket breakdown. And then we're going to take a look at any major news events to close out the week. And then we're going to wrap things up by looking at some setups and opportunities in the currency markets. Let's get to it. In this currency recap, we will be using some advanced technical analysis. Now, we believe technical analysis is the fundamental skill of every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of profits generated. If you are a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. Okay, so the big news of the day is that GDP came in well below expectations. Most economists, were looking for a print of 2.4%, and the actual result came in significantly under that. And I mean significantly, right? So advanced GDP came in at 1.6%. All right, now that's scary because it's showing some underlying weakness in the economy. However, consumer prices came in well above expectations, something like 30% above expectations. So what does this mean? It means that we might be facing down the barrel of stagflation, which is a really, really nasty set of economic conditions. So think of it like this. Your wage, what you're taking home isn't really going to change, but prices are going to continue going up. You know, and that's effectively what stagflation is, a stagnant economy, but rising prices. Very, very nasty, and it leaves the central bank in a very precarious position. Now, if we take a look at what's going on in the broad markets that we follow here, we can see that oil did really well today, came in over 1%. Gold up slightly, crypto up slightly, and then the stock market traded lower again for another session. And then if we take a look at our currencies, the yen came in weak. The dollar also came in weak after a strong showing immediately following the news this morning. Our biggest winner on the day was the pound. And, you know, pretty much everything else just holding its head above water slightly. Now, when we take a look at our cryptocurrencies, Litecoin and Ethereum led the way, but, you know, Bitcoin Cash more or less flat and Bitcoin more or less flat as well. Now, taking a look at where we're at with our market rating, I still call this like a negative 2.5 because that slope is, well, the 20 period slope is bearish, but the 50 period slope is neutral. All right, so let's call it a negative 2.5 and split the difference on those moving averages there. Not too much to add here. You know, I do believe that the rally we're seeing here is likely to be a bear market rally. I believe we're going to take out the other day's high, you know, before we start trading lower again. So we might see prices meet those moving averages, and then it could set the stage for another round of decline. Okay, so now taking a look at what's going on as far as news events go. So tomorrow, you know, or later this evening, we're going to get a Bank of Japan policy rate statement and the policy rate movement, and then the policy statement itself, and that's going to be what's really, really interesting here. I can't help but see further yen weakness on the horizon myself. So we're just going to have to be patient in terms of what the BOJ is going to come out with. But I don't think it really matters. I still see further yen weakness, at least in the short to intermediate term. And then on Friday, we're going to have core PCE come out and revised consumer sentiment numbers as well. That core PCE rating is going to be very, very important. Okay, so as that is the Fed's preferred inflationary gauge. So now taking a look at some currency analysis. We've got the CAD and the euro at a +2, the dollar and the yen at a -1, and the Kiwi, the Aussie, the Swissy, and the pound in between. So kind of hovering between a 0 and a +1 rating. So the fact that we don't have anything on either extreme end of the velocity scale is a little bit annoying. So I'd recommend pairing the yen in particular against some of these higher velocity currencies at the moment. Okay, so we're now going to jump over into TradingView and examine these currency baskets to see what we're dealing with. So the yen has broken out of this triangle that I've called out last week. It's been a great trade. I'd expect some mean reversion, sure, but I'm still in the mode of selling rallies. Next up is the dollar. So we've traded into some overhead supply here, come down a little bit, but this still looks like a very corrective decline, not like a full-on bearish reversal, at least not yet. I still expect we're going to take out those highs from November 1st, 2023. Next up is the Swissy. Not interested in the Swissy one bit. We did bounce from this demand region. We encountered some overhead supply, came down viciously. I now need to see this range break, okay, either to the upside or to the downside. The unfortunate part about this is that the range is quite wide, so I personally will be leaving the Swissy alone for some time as a result of that. The euro keeps bumping up into overhead supply here. It's not too dissimilar a setup from the dollar. The difference, is that we still have this very large bearish decline here that started in the euro all the way back in 2020. So the question is, has this advance simply been correcting this bearish decline and we're getting ready to crash off? Or was this decline correcting a larger bullish trend and we're going to make new highs? So that's like the big picture technical view. Zooming in here, it's clear that we're building some pressure. All right, we have a trend line here as support, and we have like a resistance line here. We're going to break out one way or the other. So just wait for that breakout to the upside or the breakdown to the downside. Okay, so with the pound, we're ping-ponging in this range right now. We're just about to tap into the bottom side of this upper range. So I'm going to be shifting my bias to be trying to sell the pound as we trade deeper into that range. Or if we get a nice lower time frame opportunity, perhaps a little consolidation followed by a breakdown. Next up is the Canadian dollar. So still trading within this channel, but it's, frankly, as bearish as I told you guys I am on the Canadian dollar, I can't ignore the fact that we are making a series of higher highs and higher lows. So here's a low, here's a high, higher low, higher high, higher low. This is a slight higher high. So, until that pattern's interrupted, I guess my bearish bet on the loonie isn't going to look too good. Australian dollar next. So we've bounced off of this broken trend line one more time, and we're attacking these highs again. Let's see if finally we can take them out. But generally speaking, I'm not too keen on buying the Aussie this close to resistance. There would have to be a nicer pullback, and then perhaps you can buy into that resistance level. And the New Zealand dollar is a little bit different because you can see here we're below the 50-period moving average right here, and this daily wick just jumped right off of it. I'm going to be looking for the Kiwi dollar to roll over, and perhaps we can target these lows from late October 2023. And that wraps up our possible setup exploration and opportunity identification. So in conclusion, of course, always remember to play relative strength and weakness. Make sure you're following proper position sizing and always following your trading plan. That's it for me, folks. I'll see you next time. Next week, we're going to have some fireworks, most likely. And Friday, that PCU report is going to likely provide some fireworks too. Take care. Happy trading. Bye for now.